Copper is on a historic run, up more than 40% last year and trading at record highs above $13,000 a ton. But what's really driving this rally? Fundamentals, geopolitics, or a surge of speculative money? I'm Johanna Bota, and to unpack how we got here and where prices may be headed next, I'm joined today by Natalie Scott-Gray, Senior Metals Analyst, Market Analysis, EMEA and Asia at StoneX. Welcome, Natalie.
Thank you.
So perhaps we should start the conversation by asking, how did we get here?
Of course. Well, if we look over 2025, the majority of price gains were actually concentrated in Q4, where we had a record jump over the quarter of about 21%. And in our view, this was driven by this perfect storm of factors coming together across all the key price drivers. So here, the macroeconomics, the fundamentals, the role of speculators, but also now this new parameter for prices, which is coming from the threat of tariffs or sector-specific tariffs. So just to unpack that, if we look at where we were at Q4, in the macroeconomic outlook, we did start to get a bit of a warming. So we know the Federal Reserve moved to cut interest rates 3 times, so that allowed for a bit of a weaker US dollar. We also saw tensions between China and the United States. They started to lower. They agreed to a truce of lower tariffs for about a year. We had tentative signs that there were going to be peace talks with Russia and Ukraine. We did eventually have the end of that US government shutdown, and China moved to outline that it was going to have metal-intensive spending in its 15th five-year plan, so certainly at least for the year ahead. So that supported copper prices on the macroeconomics. Then in the fundamentals, we had a year last year of really elevated disruption, particularly in mining and in the key producing countries, so Indonesia, the DRC, and Chile. And as a result of this, we have increased our deficits for 2025 and 2026, both on the concentrate but also the refined side. And certainly we're seeing that market participants are still trying to adjust to the reality that refining and treatment charges, so what miners would pay smelters to process their material, the benchmark for longer term contracts has now fallen to zero, which it never has done previously. So fundamentals supporting prices. Now, alongside this, the expectation that we could have tariffs on imports on refined copper into the US. I mean, last year it was just single-handedly responsible for total trade rerouting. So we saw about 1.1 million tons of copper enter the US. And if we look at where stocks are now sitting, about 2/3 of all global stocks are sitting in COMEX in the US. So we've got this tightness outside of the US market. And so investors have seen all of these factors and they've just piled into copper. And so the start of this year, we've got COMEX net long positions, highest level on record, and LME net long positions are in the 80th percentile to the upside as well.
So just how influential is the role of speculators within the copper market?
I mean, it's always very important, but over the last probably 4 months, I would say it's pivotal. And it's definitely, in our view, why we're seeing copper hit these new highs, certainly why copper's gone to $13,000 per ton, which, you know, if we were talking this time a year ago, we were not forecasting that. And I mean, if we just put some numbers on it, it's very evident. So the average daily trading volumes for LME over that Q4 period of last year, they went to their highest level since 2013. If we look on the Shanghai Future Exchange in December, they had their highest trading volume since 2015. And even on the CME, if we look at the micro copper contract, which is more accessible for retail investors, that jumped 25% over the course of last year. So what we're seeing for copper is it does have this bullish narrative in its own right from the fundamentals, and speculators like that. But the kind of fear of missing out and this huge appetite we're seeing in the market right now for safe haven assets, people particularly going to buy precious metals, there is now this spillover into copper as well. And so Traditionally, in a period of heightened geopolitical tensions, you would think industrial metals and copper prices would normally go down to the downside from this, because if there's a shock to the global macroeconomic environment, often decisions on investment, they can be delayed, so lower demand, lower prices. But we're not seeing that for copper at the moment. So we've got this period of heightened geopolitical tension, certainly with US policy, but copper is at all-time highs.
So with all of this in mind, then, where do you see copper prices heading in the months ahead? Do you think that we're going to keep going up, or are we leveling out?
It's a question everybody wants to know the answer to. So, I mean, in our view, I would say withstanding another shock to the macroeconomic environment to the downside, I think copper prices are going to continue to take their cues from investor sentiment over what's going to happen with US tariffs, the reality of what's happening with regional global stocks, how much material is going into the US, and it is being impacted by volatility in the US dollar. So we think those will be the primary drivers over the larger fundamental picture for copper. For example, if we look at demand, these high prices of copper are absolutely causing demand destruction in the biggest market, which is China, responsible for 58% of global demand. It seems like the copper market's ignoring that side of the factor. So really probably copper is going to continue to stay in this high trading range, and we definitely expect bouts of volatility within that forward curve in the very near term.
Yes, but what about in the longer term?
So if we look over the whole of the year, we have to remember we're only in January at the moment. We are of the view that copper prices at $13,000 per tonne is unsustainable. There are a lot of risks for prices to come down. So the first one that we're looking at is there is a real possibility that we will not get tariffs on refined imports of copper in the US. Now, if we look at the CME LME arbitrage, so the spread there, the market's only pricing in about a 5% chance for tariffs by the end of the year. And last week, with Trump delaying his decision by 150 days on whether he wants to put tariffs on critical minerals, with, of course, copper being a critical mineral, it's tied into the kind of lessening this expectation towards tariffs. So in the absence of having this high premium in the US, we don't expect as much material to enter the country as we did see last year. Having said that, some material still is. We can see it from LME warehouses, from COMEX warehouses with those numbers, which are the most up to date because trade data is delayed. But we expect the material probably going into COMEX now is probably a result of long-term contracts that were done with producers when we had those very high premiums last year. The current arbitrage shouldn't really be drawing that material into the US. So that's the first kind of downward risk. Secondly, when we talk about speculative investment, we do think that we are overdone at the current levels. And when you are at extreme levels, you often see very sharp reversals and money coming out. Now, we already are seeing profit taking. We expect that to be something that's going to continue. Now, on the fundamental viewpoint, we have mentioned we increased our deficits, but for this year on the refined side, we've got 330,000 tonne deficit. That is only actually 1.2% of demand, so it's not historically out of balance. So we, again, just don't think prices at $13,000 per tonne, the fundamentals are not justifying copper at that level. So over the course of the year, we would expect that copper is going to return to its Dr. Copper status and be able to reflect the health of the global macroeconomic environment, which, as we know, has a huge amount of risks in it.
Well, we'll have to keep an eye on it. Natalie, thank you so much. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.